All right, folks, welcome to Bitcoin Halving Day. Well, technically it might have happened last night, but it's 420, and you might think it's that other celebration. We'll talk about that in a minute, but really it's Bitcoin Halving Day, so I want to bring it to you. So welcome to the Crypto Cowboy Show. Let's get ready and let's take a look. Let's go. All right, friends, welcome. My name is Jay Scott, aka Crypto Cowboy, and I am the co-founder of Freedom Life 3.0, where we help people take control of their lives, of their freedom life, by helping them get their radical health back, take their freedom back through radical financial freedom through cryptocurrency investing. And today, I want to talk about the Bitcoin halving. It's a big deal if you're into crypto. Hopefully you've heard about it. If not, we're going to talk about what it is, why it's important, and what we can look forward to in the future. All right, so let's go. All right, so Bitcoin halving day. All right, first of all, I'm not a financial advisor, and this is not financial advice. All right, let's move in. So again, it happened on 420 somewhere around the world. We had the actual Bitcoin halving start, and that's pretty cool. Normally it is I just call it weed day. Some people call it herbal appreciation day. Either way, it works for me. So yeah, so what the heck is the Bitcoin halving? So let's talk about this. So it's basically when their reward gets cut in half. So as you may or may not know, in the Bitcoin network, it is run by miners where they validate transactions throughout the network and secure the network and basically make the network run. And every time that a transaction gets sent through, it's packaged up in blocks. And when enough transactions get into a block, it forwards it on to the next miner. And so there are certain miners that have to solve these complex algorithmic models or puzzles, if you will. And whoever solves that puzzle first, whatever miner, they get rewarded the Bitcoin and move the transaction forward. So this is how miners make their money. They get rewarded in Bitcoin. Now, when Bitcoin first started out in 2009, there were 50 Bitcoin that were up for reward if you solved that complex puzzle. And so people would get 50 Bitcoin. Of course, the price was $1, $2, $5 back then, so that didn't mean a lot. Well, now that the price of one Bitcoin is anywhere between $73,000 and $60,000, it wouldn't make sense if we were still mining 50 Bitcoin. Wouldn't make sense, and I'll tell you why in a minute. But it happens about every 4 years, roughly within a few days. And so it went from 50 to 25, then down to 12.5, down to 6.25, and then just today, it was reduced down to 3.125. So that's roughly about 450 Bitcoin that are mined each day. Now, as you're going to see in a minute, it's not very much. Now, why I say that it's so important that we have this Bitcoin halving is that programmed into the code, the creator of Bitcoin wanted to make this a hard money, meaning that this was money that couldn't be inflated. You couldn't print more like you can with a dollar. We know the Federal Reserve around the world, they all print money, which devalues the existing dollars in existence, right? So between inflation and debasement, we're looking at somewhere between 12, 14, 15% a year that you're losing if you're not investing in something that earns higher than that, or you're getting a raise in your job or maybe a promotion. And so a lot of people don't understand this, that we're actually losing the value, our purchasing power every year, that we can't invest in something that routinely gets way over this 12 to 14%. That's where Bitcoin comes in. It's where crypto comes in. It's where some tech stocks come in, and sometimes gold and silver. So gold and silver and Bitcoin are really hard assets. And because the Bitcoin was only programmed to ever have 21 million Bitcoin, at that point, there will never be any more Bitcoin ever mined. Now, you might think gold is also a very hard asset, and it is, but you can still mine more gold. In fact, when the price of gold goes up, like it is now, then miners dig deeper. They find more gold. And again, that just devalues all the existing gold out there. So Bitcoin is now 450 a day that are being mined. Every 4 years, that'll get cut in half. So by the end of what is considered all of the Bitcoin ever going to be mined will be mined in 2140. And again, towards the end, that's only going to be fractions of a Bitcoin that are going to be mined because you're having it every 4 years. So this is why Bitcoin is so important. It's why it is considered the best asset that you can invest in. And it is why it is the miracle asset that no other asset on the planet has ever been like this. And this is what people don't understand. And it's why people that do understand that are investing a lot in Bitcoin, because they know the price has to go up because it can never be debased. It can never be printed more. There's only going to be 21 million. It's also why Wall Street got into the game this year by offering their Bitcoin ETFs, and they are buying up a ton of Bitcoin. And we'll see in a minute why this is making the price go up. So, all right, let's move along here. So basically what we're seeing here is that the average price of Bitcoin has risen 19.3% in the month preceding the halving and only 1.7% in the month following the halving. Okay, so you're thinking, well, what's the big deal? That's not so much. So we can see in this chart here, it's like pre-halving down here. Oh, hold on. Let's see if I can get my pen to work here. Oh, yeah, that isn't going to work. All right, hold on. There we go. Pre-halving and then post-halving. So pre-halving, post-halving. So it monthly, it's not that big a deal. But take a look at yearly. So a year before the halving, it's risen, you can see 365% there, 142% there, 20%. These are the previous halvings. Averages out to 3,224 in the year following the halving. So after the halving, typically on average since 2009, Bitcoin has risen 3,224%. Before the halving, it's risen 185%, over the years. So you can just look at history. We know that we're in for a ride because there's every reason to believe it's going to perform just the way it has in history. So today is the start of that countdown. Somewhere between 6 and 14 months, we're going to see Bitcoin skyrocket. And I, for one, am really looking forward to that. All right, this next chart shows that, again, post-halving, the price of Bitcoin goes up. So holding your Bitcoin, if you've got Bitcoin now, hold on to it. Don't part with it because it's going up. There's even still time because look where we are right now. We're in this black right now this year. So you can see the previous cycles. This orange one here was 2011 cycle. We've got the 2011 that was the genesis to 2011. Then we've got 2011 to 2015. That's the red one. Blue is 2015 to 2018. 2018 to 22 is green, and we're right here. And look at that, folks. Woo. And there's every reason to believe that it's going to be higher than any of those previous times. So I think that we can feel good about holding Bitcoin and even buying Bitcoin. Because here's the issue. The ETFs, Wall Street, BlackRock, Fidelity, there was 11 of them that are now offering these Bitcoin ETFs. They're sucking up somewhere in the order of 4,000 to 5,000 Bitcoin a day. Sometimes actually, they've actually unloaded 9,000, or they've pulled in 9,000. There's only 450 now. They're going to be issued a day, and daily they're buying 9,000 now. The ETFs haven't even really warmed up yet because it takes about 180 days for all of these financial services and their financial advisors to understand what Bitcoin is, understand the impact, get all the rails put together so that they can easily put their clients into these Bitcoin ETFs, and for the financial advisors to meet with their clients and recommend that they probably up their risk level and put some into Bitcoin. So we haven't even seen these ETFs really start to come into play now. And they're already buying 9,000 a day. I don't know about you folks, but this just, it's extraordinary. This is something like we've never seen. This is an opportunity of a lifetime. And I'm telling you, you still have time to get in because we're around 64, 65,000 right now. If it looks like it's going to, with this, the orange is basically the supply, which is going down, and you've got the red line showing that the demand is going up, the price is going to skyrocket. There's a lot of people that say that by the end of 2024, we're looking at 100,000. Some say 250 to 300,000. By 2030, some people are saying $1 million a coin. I don't know, but when you look at this scenario with such a limited supply and a relatively high demand, and we'll see what happens. You know, that may fluctuate on and off, but the way it looks now, we are looking at a catastrophically good return in Bitcoin. So this one, this chart here, just again, it shows, I show this chart a lot, but it just shows that yes, Bitcoin goes down. It has these valleys, 70 to 80% drops within a year from from its high. But look, folks, it always goes back up higher than it was before. So people say, "Oh, Bitcoin is so volatile," or in the crypto market. Well, so what? If you're holding it for at least 4 to 5 years, you're going to be in really good shape. There's no reason to believe that that should change. And it's probably going to go higher. So the question is with all this demand with the ETFs, it's possible that it may never come back down. We may never see these 80% drops again because there's going to be this constant demand of these Bitcoin ETFs being bought. Now, here's the thing. I think it's great that we have the Bitcoin ETFs. It's going to make a lot of people that were never going to get in the weeds, never going to learn about crypto, don't really care. They're just out looking for performance, or they've got their money in their 401k and their busy life. And they don't need to worry about it, but they want to save for retirement. This will help a lot of people save for retirement as a portion of their retirement funds in these Bitcoin ETFs. They don't have to worry about it. They're going to see really good returns. But a lot of us understand that Bitcoin is one of the few assets, actually one of the only assets that you can hold in a digital wallet on your person where no one can take it from you. No bank, no government can take it away from you. They'd have to get your cryptographic keys, which you have either stored in your head or you've got, in a vault somewhere because you don't want to give up these keys. It's the access to your crypto. So if we have economic crisis and the financial markets crash, your stocks, your bonds, your cash in the bank, they're probably going to be disrupted for a little while, if not indefinitely. You may lose it. But with your Bitcoin that you're holding, that you buy on a crypto exchange and you transfer to your own crypto wallet, nobody can get a hold of that. That's yours. So there are some advantages of it. Now, with these Bitcoin ETFs, you don't ever get to own the Bitcoin. You pay for it in cash, and if you cash out, you get cash. So it's just a derivative that rides the price, which is great, but it's not like owning your own Bitcoin. So if you'd like to know more about how you can own your own Bitcoin, how you can invest in other cryptocurrencies, go ahead, subscribe to the channel because I'm going to be doing a lot more videos. In the Freedom Life 3.0, we talk about what is it like to live a truly free life. The fact that you can buy an asset that is the greatest performing asset of all time, Bitcoin and other cryptocurrencies, and that you can self-custody it and own it, and so that no one can take it from you or no economy can crash and ruin it for you. This is true freedom. We also talk about how to live a radically healthy life so that we can understand when we're not being told the truth and we can be really strong, especially if, well, there's some geopolitical issues that are happening now. What if World War III happens? You want to be radically strong, healthy in the mind, healthy in the body, and really healthy in the pocketbook, which we think is the best way to do that is through cryptocurrency. So subscribe to the channel. Go ahead and like this video, and hopefully we'll see you next time. All right, thanks. Bye.